Tyler, they were the villains of the last housing boom, even deemed toxic by the Consumer Financial Protection Bureau. Now, as Diana Olick tells us, interest-only mortgages are making a comeback. But these are not your father's loans.
This is what happened to millions of borrowers who took out no money down, interest-only loans during the last housing boom. Those loans all but disappeared in the years that followed, given only to very wealthy customers by big banks. Now they are returning to the masses in a slightly different form. Michigan-based United Wholesale Mortgage, the second largest mortgage originator through brokers, announced today it will start offering an interest-only, non-jumbo loan product.
I think it's opening the door back to, hopefully it's responsible lending, giving people choices. I think a lot of the rules have changed to where people are scared of lending in some respects, and I don't really think that that's the right way of doing it. I think that this is bringing it back to the masses, giving it to mortgage brokers who actually can give borrowers options.
But there are strict qualifications. Borrowers must put 20% down, definitely skin in the game. They must have at least a 720 FICO score, which is above the national median. They must pay no more than 42% of their income on debt, and after 10 years, they must start paying principal. Perhaps most important, they must be qualified to pay not at the starting rate, but at the monthly payment the loans will carry when they adjust higher. The rate to start is the same as a 30-year fixed, but no principal added.
So the difference would be $300 to $400 a month, literally in their pocket. They don't have to pay.
Critics are concerned these loans will largely be used for refinances, in which case the borrower would not have to put 20% down, only prove that the home had 20% equity in it at the time.
Home prices fluctuate, and so it might be true that a consumer finds themselves in a loan and they're using equity to refinance the mortgage, and in reality, in subsequent years, during the interest period, they find that the value of their home is not as high anymore, so they're underwater.
While it is unlikely home prices will crash that much again,
Never say never.
like she said. For Nightly Business Report, I'm Diana Olick in Washington.